What's going on, traders? Welcome to the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. As always, we'll cover our broad market here. We'll talk about our core list of companies there. And also the Discord members did vote on a new set of quickfire round coverage here. And notice the last name on the list is Silver, which is apparently going to be the next big short squeeze. I've got some very specific thoughts on that, so stay tuned. If you want to vote for next week, feel free to join the Discord. It's linked down below in the description, along with all of our other free resources. And we are headed into a new month of trading, so we'll look at some monthly bars as well. Jumping into our SPY monthly chart, I of course have to point out that we have an inverted hammer that's printed. But what I also want to point out is the fact that we've been one time framing higher ever since October, right? We've been putting in higher highs as well as higher lows. So we did continue that this month, but the structure here is indicative of a little bit more of a pullback. So what are some key areas on the monthly chart you want to watch out for? Well, of course, it's going to be last month's low. So basically somewhere in here around the 362, 50 mark. Anything underneath that, the breakout highs, and again, this will become very clear on a weekly and daily chart around 351. And then lastly, on the monthly time frame, the place you do not want to see it go to maintain in a monthly uptrend is, of course, our lows from in here. And just to put a dollar figure to it, right, let's just round that to like 325, okay? As long as we hold above 325 on the monthly time frame, we will technically be putting in a higher set of lows. So even if we pull back to here, 340, 330, that's A-okay, because as we know, uptrends are defined by higher lows, right? So here would be your set of higher lows and then higher highs. So we would just need to go in and put back a higher high to continue the uptrend. If we go sideways, that's a different story, and we have to start considering, sideways trend. Could we potentially roll over? But as of now, there's nothing really pointing to the fact that we could see a, full-blown reversal. The market's crashing. Again, if anyone's ever telling you market's crashing, things like that, I always advise you, go look at a monthly time frame chart. It'll definitely change your perspective, okay? Let's drill down into the weekly and just talk about some of those levels in a little bit more detail, right? We obviously have, for candle structure here, a bearish engulfer, fully engulfing the prior week's range, the prior week before that, and getting decently below the 50% mark of this larger week's range right here. So all things considered, again, it does look like we could see a little bit more sell-side activity in the marketplace, especially on this higher volume. Now, one thing I want to caution you is, what did we see right here? Right? It's a red continuation candle, high red volume, but the market rallied out of that low. One thing that's a little different about what we saw here is that we actually had a double bottom. There's not quite as clean a market structure up here, so it's something to at least consider. But if we do continue lower, let's just do something like this, quick and dirty. Say the average, extreme red week, we're on a weekly time frame now, looks something like that to the downside. If we stack another one up, expecting sort of, average worst case scenario, could it get worse? Absolutely. Could it be better? Sure. If we expect the average sort of, more extreme red day, then we're just looking at a move that pretty much comes back down into the breakout highs closer to 350. Let's go to a daily time frame and actually check out some levels and see what's going on here. Obviously, we broke the support trend line that we talked about in the midweek market update. We also closed below the daily 50 SMA, this blue line here. All of those things are bearish, okay? So if we are expecting lower prices, we do have that target here at 364.22 first. Again, that's not very far away based on that weekly sort of projection, quick and dirty way. But if we go lower, you have a little bit of support coming in before the 350 whole dollar. It's actually closer to 354.60, as noted by, a better grouping of lows here, as well as if we scroll back, you can see it was a prior high in here. So that would be the target I would look for to the downside. Now, could the week get nastier than that? Sure, absolutely, if the selling does pick up. But again, I don't want to try to, implant into your mind that the market is crashing or that we're going much lower. If it does happen, sure, there is some poor structure below us that we could potentially gravitate towards, which is closer to the 340 mark. Now, if you remember the monthly time frame, we would still be in a monthly uptrend even if we went there. So at the end of the day, right, we can day trade this in whatever direction. You shouldn't really be concerned about, up or down, good or bad. It just is what it is. It's like asking, will it be cold out tomorrow? If it's cold, you put a jacket on. If it's not, you don't, right? It's like if the market's down, you trade puts. If it's up, you trade calls. So that's how we're going to think about it. If you're a longer term investor, obviously this is going to impact your investment time horizon a little bit more. If you're looking at anything holding over than 10 years, you're not really concerned about this little blip on the radar. So upside targets, one thing I want to point out is, again, on that weekly time frame, we saw a bounce out of a double bottom. Obviously, we don't have that, but what we do have is the daily 50 SMA. If we get a dead cat here, we're looking at first target above that 377 or 6-day balance lows from in here. Anything above 6-day balance highs at 381, and then the all-time highs after that. If we recover out of this sort of break into the 50 SMA, it would be a fake break. It would probably catch a lot of people short that wouldn't want to be short if we catch a major rally to the upside. But again, based on everything that we've talked about so far, does it really favor that? I'm not entirely sure. The key to this one will be the 50 SMA early on in this trading week. Now, jumping into the Qs, we almost have the exact same picture. Our candle is not as bearish here. You can see that the body is actually, it's almost a doji, right? The body is very small. It's compressed. It's almost the exact same where we opened and closed. And in the Qs, at least on the monthly time frame, we have much cleaner targets to look at. Obviously, the first one is here on any continued pullback, right around 300 psychological and the breakout point from this monthly bull flag. And our higher set of lows that we need to hold on to essentially are just below 370. It's probably upper 360s. We'll look at that in more detail as we continue on. But once again, if we continue to pull back, even as long as we hold those levels in there, still in a very, very aggressive monthly uptrend, right? Look at this section of the chart. We talked about one time framing on the SPY chart. I mean, look at it here. 1, 2, 3, 4, 5 months of consecutive one time framing. And now we've done it again, 1, 2, 3 months in a row. Will it continue? I'm not entirely convinced that it will, again, based on the candle structure, but the monthly uptrend is certainly strong and intact as of now. So coming into our weekly chart, you can see once again we have a bearish engulfing candle on some decent red volume down below, and it's taken out the prior month high and low. We couldn't quite do the month, or excuse me, we're talking about weeks now, the week before that. So we're pretty much sitting at key support, right? If we go and do something like this, the low end and slash the high end of these two candles right there are support points on the weekly chart. And what that level is right around the 311.37, okay? And it's very, very close below us. So if we do move lower, support is right there, but if it breaks, and the odds kind of favor that, right, with our inverted hammer on the monthly, our red engulfer here, we are looking, and again, this is what we talked about on the monthly time frame, is just under 300, the breakout area in here. Let's actually just go to a daily time frame and talk about the levels on that. So if you bring those up, you can see here, actually another good thing that we can talk about is the divergence here between the Qs and the SPY. So the Qs are obviously at the support trend line. They did not break it yet, and that's acting as super support, right? We have a prior horizontal level there as well, right around the 312 mark. So the divergence here, there's two ways you can play it. If we get a bounce here at the support trend line in the Qs because it's super support, then look for SPY to have a dead cat bounce. If the Qs sort of open up weak early on in the week, I know that's a little bit confusing there, but weak early on in the week, look for the the move into the 50 SMA on the daily time frame. If you look at it in that sort of angle, right, the Qs have a little bit more room to fall, and the SPY probably does not see that dead cat bounce. So there's your key to knowing what direction we could potentially go early on in the week. It's all going to hinge upon whether or not this truly acts as support in tech and in the Qs. We know that the XLK is a huge part of SPY, so that will drive early on in the week the direction that we go. If we do see the bounce here, right, we have to battle back up through here, 317 quarter. Anything above probably moves into some of these highs around here, around 327 the whole dollar, slightly below it with these two highs in there, almost equal, and there is a small gap above there that needs to be filled, right? That's at 326.33, fills up and closer to that 327 whole dollar. So again, there's your upside targets. If it breaks, 50 SMA first, anything underneath, you can see key support in here around 303.84, and then we go back down to that breakout area that we talked about on those longer time frames, closer to 300 psychological, but really it's slightly underneath around 298. And last but not least, we have IWM Russell 2000 and our small caps, which continue to be on fire. Obviously, the monthly bar here is still different. We are one time framing higher. We've been doing so ever since this red candle here, which was September. So 1, 2, 3, 4, 5 months of one time framing higher. We can't ignore the fact that we still have an upper wick. Could there be more of a pullback? Absolutely. The supports and resistances here on the monthly time frame are not as clear. There's no clear set of higher lows that we need to hold. Obviously, there's this one in here, but that's much lower, closer to the 140. We're currently trading, 65 points higher than that, up around 205. I would argue that what you want to see on the monthly chart hold is this sort of prior all-time high breakout hold. That's, low 170s. Okay, so let's break it down onto a weekly, talk about some levels there and the candle structure. Obviously, again, a bearish engulfer, completely taking back the range of last week and very close to the range of the week prior to that. And on the weekly, you can start to see that your support is right here. Okay, so let's actually just continue on lower. We talked about candle structure on the weekly, obviously good red volume just like the rest of all of our indexes. Let's talk about very specific levels here on the daily time frame. We'll pop those back on, and what you can see is, again, we are starting to break that daily support trend line through price as opposed through through time. Excuse me there, sideways through time. So again, weekly, daily, monthly, all kind of pointing to slightly lower. If we fail this key support right at 204, then yes, poor structure below should probably be repaired there. Under 200 gap fills down to like 197.75. 50 SMA will meet us there, again, if that is the move. And then after that, that weekly support that we were sort of identifying and looking at is here, closer to that 191.66, not 190 the whole number. And then after that, another cluster of lows here at 187.68. That's, again, worst case scenario if we break sort of all of this key support and daily 50 SMA on the way down. If we see a dead cat out of this area of support, first have to battle back up through here at the 208.50 mark, let's call it, and then all-time high sort of resistance at 215. That outlier there, the true all-time high at 117.91 won't really be in store, right? You first have to battle up through that 215, so keep that in mind if we do see the dead cat. Obviously, the trend here is still up. It's still strong, and it's still intact until we start to violate those lows at 191.66. Small caps are still in an uptrend technically, right? So keep that in mind. We've talked about divergence. Obviously, there's still much more room to go until our 50 SMA here. And again, with all of these sort of moving pieces, I think Qs will really be the leader here since they're tech. They're the heaviest weight in the market right now. That will be your indicator on whether or not we bounce in some of these other indexes. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So jumping right into Apple, we can't ignore the fact that they had record-setting earnings, but the stock still sold off. So that's why I always tell you guys, probably not a good idea to trade options through earnings, 50-50 event. Regardless, the setup here is probably a first touch buy into 50 SMA and support trendline. Now that's because we're coming off of a higher high as opposed to a lower high from what we set right here. If it was here, that was the high, and then we came back down, probably not as much confidence in that setup. So there's a tip for you. So if we do get a bounce, we obviously first have to clear that 131, but your target is going to become the 138 and then hold on to a piece for the 144.31. Again, is that going to happen all in 1 week? Maybe not. Chances are probably not, but some levels for you to consider. To the downside, if this area fails to hold as support, right, that area is going to be between that 126.50 to 127.50, depending on time of week and, if we truly do get down into it. If that fails, right, we're looking for a move lower in Apple to 121 the whole dollar, and if the whole market continues to sell off, your next support below on Apple is at 112.50. Keep in mind 200 SMA will continue to creep higher based on the daily uptrend that we've been in for quite some time. So that could provide super support here at 112.47. And if we just do something like this quickly, you can see the range of this week compared to what it would take to get there, especially with the earnings catalyst. I wouldn't expect, an entire move into 112.50 this upcoming week. Moving over to Netflix, this one actually caught me by surprise. I was certainly not anticipating that candle right there would almost entirely fill the gap below in almost one session. So a little bit of the gap still remains, right? 515.66 still fills down to 509 just about. 50 SMA is going to be at the top of the gap, however, providing some support. So a lot of support in this general area of the chart. If the double bottom from Thursday and Friday fails, that's your first target. Probably expect a dead cat bounce out of it. That would form a new little double bottom, in which case we are looking for a retest of the 530.50 sort of flush point. To the upside after that, again, probably 550, very choppy market structure in here, but that's the key resistance I'm sort of seeing, and it's also a psychological reference point. To the downside, if the gap fills, we talked about that 509, anything underneath, and again, I'm not really anticipating this, but if the market really does have an aggressive sell-off, your target is at 493.85. Moving over to Tesla, this one also has a gap in it now. So the gap is here. Again, based on earnings, we gapped down, could not quite fill the gap all the way. That's from 848 up to the low of this inverted hammer there around the 859. Call it the 860 breakout point, actually, just for round numbers sake. But based on the candle that we're looking at, again, it's a red continuation candle, so we are expecting a little bit more downside action. There is technically a gap in here. We haven't been very, consistent with picking out and being nitpicky about that structure. But if we move lower, the 740 area does look like a key area of support based on the daily uptrend, right? If we draw on a support trend line that strikes in from some of these lows, that would make a great buy point, especially if that 50 SMA can slowly creep up and, based on time, depending on when we get there, provide a, three-banger, triple support, super support point. So that's the area I'm looking at, 740 as a potential buy in Tesla. Anything underneath, if it fails, probably coming back down into the breakout area from in here. We have this first at the 684 mark, and anything underneath is at the 653. Basically, again, that would be a pretty strong pullback in Tesla, and this one, obviously, it can move, right? We have extreme volatility in Tesla, so I'm not saying it can't get there, but I think based on the strength of the daily uptrend, the fact that a lot of people out there want to be a buyer of Tesla probably holds up here at the 740 support point. Alibaba is still a pretty painful chart to look at. Our gaps are getting less and less by the, as time goes by. Still a gap above here and a gap above here, just to help you sort of differentiate those yellow lines. But based on where we're at, right, we have a triple bottom in the past, as well as 250 SMA, all coinciding with this 250-275-ish area. I would expect a bounce, right? So if we do, we're just going to target this set of highs in here. We're not looking for much. We're just looking for a little bit of a bounce up into this area around this 265.73. If it goes higher, great. Look at those gap fills as potential targets above. But with earnings coming up, I just want to give you the levels to be prepared with. If we flush here, then obviously it's quite a ways lower for Alibaba to the 238 mark. Anything underneath, we have 225. And then lastly, the line in the sand is going to be the 211.23. That's the major low that we've seen recently. If that's violated on earnings, I think Alibaba could potentially move much lower. But earnings, 50-50 shot. I'll tell you once again, probably don't trade any options through it. Facebook was, quite an interesting one. I thought it was going to finally break the daily resistance trend line. If we scrunch that up for a moment, you can see it better there. But instead, we pulled it back extremely hard off of it. So we're coming into potentially a key juncture on the chart. First of all, we have 200 SMA there, but more importantly, this area of support at the 245. If we come all the way back down and retest it, first touch based on the oversold nature of this action right here, probably going to be a dead cat bounce. But if we don't get much materialization of that bounce, say we do something like that and then retest again in a very short time frame proximity, probably get the flush of that daily support there at 245. Now that's a pretty aggressive downside target, right? Anything underneath fills potentially a gap down to the 235, we'll call it. To the upside, if we do see a bounce off of that 200 SMA or potentially the 245, a meaningful bounce that is, just your target's going to become the retest of here, which as we can see was a critical flush point. It acted as resistance sort of on the retest here, left us a little gap, which of course has now been filled, but that's at the 264.81 level, call it 265 the whole dollar. We're kind of in the middle of ranges, right? So there's really no clear trade in my estimation right now until we either come into 200 SMA and confirm a bounce to retest here or break to come down in here, in which case I already told you probably a first touch bounce at this level. NVIDIA earnings are a little bit further out, something to consider as we continue to trade though, but what's just so, interesting about this chart is that it's just perfect ping pong back and forth, and I think that we might remain in that exact same sort of state until earnings is the catalyst that breaks it out of this range. Now, if the market does continue to sell off hard, see some more sell side activity, then just have some downside targets ready. We of course have the 505. Anything underneath is going to be your 492.20 as noted by this grouping of lows here, and lastly we'll call it off at 481.71. If we get a bounce though, we of course have to clear that 50 SMA. You can see almost a perfect double top top here on Thursday and Friday. So anything over the 533 mark, probably a retest of the upper end of the channel, which is simply at 544.42, and then just walk them up, right? We have a double top here at 558.62. Anything above, we have the 573, and then all-time high after that. Microsoft is the most bullish of the bunch, and I'll tell you why. Of course, it's because we made a new all-time high, and we're pulling back directly into it. So what you would ideally want to see happen is a bounce at this level here at the 231.15, but based on the candle structure, I'm not entirely convinced that it holds, perfectly to the penny here. We might dribble a little bit lower and then potentially make another move up and above that level. Basically, all I'm saying is you want to see a higher low start to hold, and it's really got to be above that high right there. Let's just put a dollar value to it. It's around 227 the whole dollar. You do need to see that sort of act as support on any sort of back test there. Again, based on the structure, maybe we dribble a little bit lower, but based on this, right? Of course, there's a few things that we have to take into consideration. It could be a daily bull flag, in which case the breakout is going to be over this area of resistance. I would probably argue it's somewhere in here if we picked out an intraday level, but your all-time high new resistance is at the 242.64. Keep that in mind for any, strength truly headed into blue sky territories. And lastly, we have Amazon, the beast, which has earnings coming up right around the corner on the 2nd. One thing I'll say is that this is just very similar to what we saw in NVIDIA. We've pretty much been in a controlled chop for quite some time, and I think earnings will finally be the catalyst that really either sets up a new trend or just obliterates it, right? So one thing or another will eventually happen here. Your key levels to pay attention to is right now we're currently holding that 50 SMA and prior area of resistance at the, let's just call it 3,200 mark. To the upside, if we continue higher, we're going to have to battle through the 3250, and then here you can see triple top, or sort of three clusters of highs anyways, here and here at the 3344, call it 3350. Again, earnings could send it up and above that, in which case you're looking at the 3491, call it 3500 whole dollar. To the downside, again, if we break down through this 3078, you're probably looking at 200 SMA and the 2998, call it 3,000 psychological number. Again, based on all the earnings that we've seen, probably a coin toss. Even if they report phenomenal numbers, we just can't know for sure what direction it could be headed. Kicking off the quickfire round with PLTR, you can see we've obviously broken out of that symmetrical triangle, and we're starting to form a new area of consolidation. Some intraday levels for you to pay attention to. If we can clear 3771, probably looks good for a move back higher to retest closer to the all-time high around 45, the round number. If we flush the lows here at 3475, you'll know what I'm talking about on an intraday chart. We probably move lower into the breakout point of 3280, as noted by our prior high in here, and where this move really started, to get some serious legs from. If we fail back down into this range, right, we're talking about this range here, of course, probably want to see strong support hold up at 25.25, but as of now, I don't see why we wouldn't consolidate somewhere in this general range. AMD looks quite bearish to me, simply based on the fact we're breaking down out of this balance area. And when we play balance rules, we always look for first a true double of that range, and that doubling would put us closer to the 82, the whole dollar mark. So keep that in mind. That'll be an intermediate area of support based on those rules, since in this W over here, there's really no clean cut, intermediate support to pay attention to. So 82 is up first. Anything after that, probably a move all the way lower into 74, the whole dollar. Keep in mind, 200 SMA will start to creep higher. Again, based on this candle structure in here, it does look bearish, but if we do move back higher, we will have to battle through, right, 89.42 and then 90.50 to get back into truly this area of balance. Snow is building a flush point at 266.13. The reason I'm confident in calling this a flush point is because of our resistance trend line, indicating that we do have lower highs coming into this level. If it flushes, the target is here at 231.40. If we get a bounce out of this area and we can break above that resistance trend line, you're looking at targets first, probably around the 290 mark, and then here we have the 314.15. Above that, you're looking at 357.75, but again, probably a flush point here as opposed to back higher. Square looks like it's bouncing out of a round number support, that $200 mark right here. Keep in mind, earnings are a little bit further out on this one, but something to consider. Your key for upside continuation is going to be a break of this double top at 226. If it happens, look for a retest of this all-time high resistance area around the 242. But based on the fact that we closed below that 50 SMA on the daily time frame, there is the opportunity for potentially a retest of the 200. And on the second test, because we already had the dead cat out of it once, it probably breaks and moves us lower into the 191.85, and after that you can see there's a little ways to fall into the 160 whole dollar. CCIV is another one of these shell companies. There's not a whole lot of price action to talk about here. It's very choppy. It's pretty much straight up. Basically, you want to treat this like all of our other shell companies, and you want to treat it like a new IPO, right? Basically, there's not a lot to go off of, so you want to keep your risk small. You want to use clear-cut stop losses. You want to day trade it for the most part. There's no key market structure to base a trade off of. For now, I would say if a gun was to my head and I had to pick out supports and resistances, here, 21, the whole dollar is probably a key area of support you want to see hold based on this little back test and starting to bounce. Obviously, all-time high after that. If this fails at 21, the whole dollar, you're looking at this cluster of lows in here around 17.15 to hold, and anything after that, again, 50 SMA is really immature, has never really been tested. I wouldn't put a whole lot of weight into it, but that is the next up support below. So DraftKings is seeing almost an entire week of consolidation. Obviously, we moved higher after Monday's down day into the 50 SMA here, but since then, we've really done nothing. We've just gone sideways here. So in an intense period of weekly balance, if we can take out these highs here, which are going to be closer to, let's just call that around 56.69. If we can take out those highs and clear this sort of resistance, upsloping trend line that we have in place, it looks good for continuation into all-time highs. But if that cannot happen, say we get rejected at this grouping of highs, obviously we're trading at the lows of this balance as of now, but if we get rejected at the highs, if we get rejected at the support trend line, probably a move back down into 50 SMA and anything underneath. I would say that your support is here now at the 49.75, and anything lower is here back down to that 43.88. NEO, again, we're in a strong daily uptrend. I could classify this as a flush point, which I guess I will. It's at 56. If it breaks, look for a move into the 50 SMA on the daily. Anything underneath is at sort of 50, the round number. We do see lower highs coming into it, but one thing I do like about this, as opposed to what we talked about on snow, is the fact that we're still holding above the prior all-time high and sort of breakout zone here. So there's that going for it, but all these touches do not bode well for, a true break would send us much lower, okay? Anything above, obviously retarget all-time high after we can clear that area of resistance here, which is at 64.32. American Airlines, again, this one got halted across some platforms in this trading week because of this move higher. Basically, we are trading back down into this overall range, though, which isn't, the most bullish thing for the stock. If we can hold up above 50%, which is somewhere in here, 1641 as support, that is the bullish case. We consolidate somewhere in here and potentially see a break once more of 18 to go higher. After that, again, I'm not entirely sure. I want to have true confidence in this as an upside target at 2177, but it's something to key off of. To the downside, if 1641 fails, you're just looking at a rotation all the way to the low end of that balance at 15. Pinterest earnings are coming up right around the corner, so something to consider if you do plan on trading it. Right now, we are stuck in a range very similar to what we saw in AMD. However, we haven't broken in one direction or another. So if we do break, obviously a true double to the downside puts us closer to 55. If we break to the upside, meaning that before earnings we see a run all the way to the top end around 75, the break would have to be, if we just eyeball this here, the first target's kind of up around 85, right? So those are quick, rough ways to gauge targets based on balances, based on the candle structure, lower wicks. It does look good if we can clear the 50 SMA and this little double top here early on in the week at 69.25 to at least come in to retest 72.74. If it fails, we talked about that move lower to 55. That would also put us kind of right in line with this key support down here. So with earnings coming up, probably a 50-50 shot either direction. And lastly, we have Google before we talk about silver and the potential squeeze there. Obviously, earnings coming up on this one early on in the week. This one looks pretty bullish to me, very similar to Microsoft as opposed to something like Apple or Netflix or any of those other tech companies that are fairly bearish right now. Because once again, just like NEO, we're retesting and holding on to that prior 1800 sort of breakout mark. This is where we moved higher. We're pulling back, holding it as support as of now based on this hammer from Friday. If we can curl back up and retest the 1915 mark, probably looks good for higher, but again, keep in mind earnings. To the downside, if it fails, we're looking at 1711, right? Clear range that we've been stuck in here. There is a gap to fill, technically to 1659.50, we'll call it, and it's really underneath that 1694.20. Obviously, that support level is slightly higher. The gap truly doesn't start to fill until we break down this area, but it's there. The gap is there. Anything underneath at 1584 as next support, and you have the levels based on earnings. Anything could potentially happen. Now, I don't necessarily want to talk about levels here on silver so much as the actual premise of seeing a short squeeze on an actual commodity, meaning that there's a physical asset that is attached to what we're trading here. Now, I'm not going to say that silver and metal prices can't be manipulated. However, when there's actual silver bars that exist in the world, there's a huge silver market. There's obviously jewelry. If the price of silver were to go to, let's just say 1,000, like some people are saying, what do you think will happen to all of that physical supply? Obviously, people will be running to stores to cash in their silver, you name it, at those prices, and I just don't see it happening, okay? So if you really do want to trade this, if you want to, potentially be involved in what happens here, do so responsibly. This has been my motto throughout all of this stuff going on, with squeezes and Reddit and all that stuff. Please trade whatever you decide to trade responsibly. If you see a break of this 25.50 mark, sure, go ahead and target this 27.39 all-time high, because this double top would be breaking and our next key resistance is sort of up there, okay? But if it fails here, right, there's no reason to be long just because a bunch of people online are saying, be long silver and it could potentially squeeze to 1,000. That's like a pie in the sky target. I do not think in 100 years silver will go to 1,000, at least in the SLV sort of ETF. Okay, so be prepared for that. To the downside, obviously triple bottom in here turning into a flush point. As those get tested more and more, you get more touches. You just increase the odds of it breaking. So obviously a choppy chart here in silver, your downside target would be probably anywhere between 21.25 down to this sort of double bottom in here around 20.59. 200 SMA is there as well. Obviously look at the volume increase that we saw on Thursday and Friday. It's not like people aren't trying to do this, but again, at the end of the day, with it being a commodity, with there being a physical asset attached to the price of silver, I just don't see it happening the way that I'm sure many people are envisioning silver going to 1,000. So there are my thoughts. Again, at the end of the day, it all comes down to personal responsibility. If you get long up here, have a stop loss. If you don't decide to get long and you get long on the break of the all-time high, great. You have a decent, trade setup on your hands, but again, use a stop loss and don't just, expect silver to go to 1,000. It could very well roll over into some of the support that we just talked about. So with that, I'm going to wrap up the video. If you learned anything new or found this video useful, let me know down below in the comments section or simply leave the video a thumbs up. And with that, I wish you a green trading week.